Hi, I'm Ryan. I'm the Novice stock options trader, and this is my video blog about my opinions and my market analysis. Just to kind of give you a brief summary of me. Currently, what I'm doing right now is I'm paper trading with using Thinkorswim's platform with paper money. So it's not real money yet. The only real position that I currently have right now is on Philip Morris, and that's kind of my main focus, is to really start trading small. But my focus really just is really to trade options. Trading stocks kind of helps me because it's a little slower process, whereas options requires much more time to monitor. This is my son right here. I'll show you a video of him, and he's just trying to create a mess, as you can see. Hey Ender, say hi. Okay, so anyways, that's Ender. And what I'm trying to do is I'm trying to become a millionaire, become wealthy, trading stock options. So that is really my main goal, and through the process of the next few video blogs, I'm going to do at least once a week, kind of give my market recaps of some of my positions. Most of my positions you're going to be able to read through my writing blog, because obviously it's a little easier for me to talk or type it out versus talk about it. Right now I had a pretty good trade on unemployment that I made. I shorted the diamonds, so I made 200 shares. I shorted, made about 4.5% return, which is nice. So about tight profit, about $800 on my paper trading account. And then also, on the VIX. Trading volatilities, I'm actually trying to get a good feel for how to trade volatility. So I kind of find that very interesting because, if volatility is high, most likely it's going to go back down again, and I can profit off that trade. And I made a good trade where I bought a February call, and just so you know, with options, when you have a option that is going to expire sooner, like that was a February call, so it's going to expire in February, the volatility is much more higher, so they have much more fast movements in the price. And unemployment numbers were going to release on Friday, and I knew it was going to be bad. Everyone knew it was going to be bad, but I just knew that it would stir up the markets. It always does. And interestingly enough, through the beginning of the year, there was kind of a mild rally. We actually made it up above 9,000 in the Dow Jones, but again, we're back down to the 8,600 mark. So that was a nice trade. I think I almost doubled my position. So right now, I think I bought the contract for $4.60, so it's about $460, and it went up to about $7. So a nice $250 profit, and I think I had 5 contracts. So basically about $1,000 with an investment of 4, 8, 12, 16. So I turned $2,000 to $3,000 in literally like 3 days. So that was kind of nice. I have also a trade on Target, a credit spread, but then more on that. So this is me signing off. Throughout these video blogs, you'll find me kind of jumping around a lot because my little 16-month-year-old, 17-month-year-old son here is is growing, and he's going to create a mess here, and he'll distract me. I'm trying my best to edit the videos so that it's kind of interesting, so that I know what I have to say, and then there's good information. And just kind of my market outlook right now. Just some stuff that I'm doing to kind of keep me interested in the market is I'm just watching Jim Cramer's Mad Money. I recently found out that Fast Money is actually on a podcast for free, so that's pretty cool. So I'll probably be listening to that maybe every day I go to work. I did a trial on IBD, Investors Business Daily, but my primary strategy that I'm pretty much focused on is just trading volatility. How to mess with volatility is volatility is high, make a trade where volatility will probably go low. If volatility is low, make a trade where volatility will go high, and make the positions pretty long. Not take big risks. When I say risks, high risk with options probably be taking option spreads that expire within the 3 or 4 months. If I do like a 6 or 8 month or even a year, I don't have to worry about it as much because the trade can sit. So that's kind of where I'm at with that. And I'm just kind of get broader ideas of how I can trade and analyze the markets. But right now, that's my basis concept for trading. And then the next thing, of course, is the Dow Jones. I watch that thing every day. I'm so used to watching it, and I have a good feel for how it performs and how it moves. And it's just basically a bunch of calculated risks. So probably what I'll start doing now is I'll probably start trading some options on it versus shorting. In real life, I probably wouldn't short because a 200 share short on a Dow Jones was like $18,000, and I don't have that money to really do that. But I wanted to do it because the Dow Jones relatively doesn't move a whole lot, and so it's not as volatile, and it won't kill my bank account, which is kind of why I like trading it. So anyways, I'm Ryan. I'm the Novice stock options investor, and thanks for watching my video blog.